Jesus famously said, "He who is not with me is against me." This is increasingly the position of the Biden administration when it comes to its undeclared war against China and Russia. This week, the U.S. is pressuring Germany to send its main battle tanks to Ukraine. Last week, the U.S. was pressuring Japan to stop selling its semiconductor manufacturing equipment to China. While Washington seems impervious to the impact of her policies on the economic interests of its main allies, Beijing, on the other hand, is quietly using its trade policy to strengthen and reward its allies. What do the latest US and Chinese trade data tell us about how the two superpowers are using trade as a tool to advance their strategic interests? Which countries among their allies are the losers and which ones are the winners? What does this tell us about which side has the upper hand in the long term? And what does it mean for the global economy and financial markets? Hi, I'm David Wu, a former Wall Street strategist with a 20-year track record of making actionable predictions about major global change. Welcome to The Money Game, where I take on groupthink, propaganda, and conspiracy theories in my critical analysis of markets, economics, and politics. Before we begin, please hit subscribe and the bell button so that you'll be notified when a new video comes out. In November, US imports from China dropped 23% from a year before. The last time we saw such a precipitous decline in US imports from China was during China's first lockdown in the beginning of 2020. That lockdown caused a massive disruption to the global supply chain. Supply chain pressure began to ease at the start of 2022, so it cannot be the reason for the fall of US imports from China last year. So why? One possible explanation is that US consumers have been spending less on electronics. But spending on electronics and appliances fell only 7% in December, far less than the decline in imports from China. It becomes more clear when we look at China's share of what the US imports from the rest of the world every month. What we can see is that China's market share peaked in 2018 and has been declining since. Sure, there was a temporary recovery in 2021 when the demand for phones and computers surged. But as soon as that was over, China's share of US imports resumed its downward trend. Amazingly, it ended in 2022 even lower than it was at the peak of the supply chain crisis in 2020. The inescapable conclusion is that the trade war between the US and China is the main reason for China's shrinking market share in the US. If the US is buying less from China, it must be buying more from somewhere else. So which countries have picked up the slack? Since 2018, China's share of total US imports has fallen by 4.3 percentage points. Over this period, ASEAN countries, those belonging to the Association of Southeast Asian Nations, have seen their combined share of total US imports increasing by 3.2%. Other countries that gained at the expense of China included Taiwan, Canada, and South Korea. One might have thought that Mexico and India should be also major beneficiaries, but so far this has not yet been the case. Interestingly, Japan and the European Union, America's most important allies, have not only failed to profit from China's loss, but have lost US market shares themselves too. Why have ASEAN countries done especially well out of the US-China trade war? The reason is pretty simple: low labor costs and their integrated supply chain with China. Vietnam has been the biggest winner to date, with its exports to the US doubling, with its share of total US imports gaining 2 percentage points over the past 4 years. Like China, Vietnam is a one-party country ruled by its Communist Party. Like China, Vietnam ranks very low in the International Freedom Ranking. Biden characterized the battle between the US and China as a battle between the utility of democracies in the 21st century and autocracy. He said that he wanted to prove that democracy works. Therefore, it is extremely ironic that while the Biden administration is pushing US companies to get out of China, it has turned a blind eye to the fact that US companies are now rushing headlong into another autocracy. Not to mention the fact that it was not so long ago that 58,000 Americans died fighting for democracy in Vietnam. What all this says is that the US-China trade war is not about democracy versus autocracy. It is about America resorting to protectionism to stop China from challenging her global hegemony. Every country in the world has the right to do what it thinks it serves its best interest, and this includes the United States, of course. But we should at least call a spade a spade. So what has China, on her part, been doing to defend her own interest? It should come as no surprise that Chinese imports from the US have also been declining. The latest Chinese trade data show that imports from the US fell 7% in December compared to a year before. While the share of Chinese imports from the US is down from 2021, it is still higher than where it was in 2019. The implication would seem that despite the trade war, China has not been openly boycotting American goods. Whether this is because Beijing does not want to add fat to the fire, or that it's not easy to find substitutes for American imports is not clear. But this much we know. In October, 1 out of 4 phones sold in China was an iPhone. This was the highest market share ever reached by iPhone in China. Meanwhile, Tesla sales in China surged 50% last year. The market share of US products in China has declined only a modest 0.7% over the past 4 years. However, US allies suffer a lot more, presumably because they're US allies. For example, the share of Chinese imports from the European Union fell by 2.3 percentage points since 2019, while that of South Korea and Japan fell by 2.1% and 1.6 percentage points respectively during the same period. These are big drops. And in the case of South Korea, it follows Seoul's decision to install the American Terminal high-altitude area defense missiles that China views as a potential threat. Japan's decision to double its military spending and to deploy American long-range missiles has also drawn sharp criticism from Beijing. So which countries have picked up the slack there? Data show that Chinese imports from the so-called Global South have increased sharply. In particular, ASEAN countries, Latin America, and Saudi Arabia have been big winners. Interestingly, despite the escalation of tension between China and Taiwan, it has not so far come at the expense of the market share of the runaway island in China. It shows that despite the rhetoric, Beijing thinks that carrots will work better than sticks when it comes to dealing with Taiwan. China is on a charm offensive to woo ASEAN countries with which it shares close historical ties and value systems. The relationship between China and some of the largest ASEAN countries, like Indonesia with its population of 270 million, and Vietnam, has been warming over the past few years. A strong relationship has been building up also between China and Saudi Arabia and other Gulf countries. This is evidenced by the warm welcome Xi Jinping received from Mohammed bin Salman, the Saudi crown prince, when he visited Riyadh last month. What is very clear is that both the US and China are using trade as a tool to meet their strategic goals. The US has been using the tool more bluntly to slow China's growth. In contrast, China has been careful not to go toe-to-toe with the US. Instead, she has been using trade to promote its long-term strategic advantages. Who have been the winners and losers of the trade policies of the two biggest economies in the world so far? Major American allies like Europe and Japan have been the clear losers. They're losing market share in both the US and in China. And it so happens that for Japan and Germany, China is their single biggest export market. Henry Kissinger once said, "To be an enemy of the US is dangerous, but to be America's friend is fatal." Europeans and the Japanese are now living under this curse right now. Indeed, they're losing out in almost every possible way in a polarizing world. They're paying more for their energy. They're spending more on defense. They're losing market share in China, and they're not even gaining market share in the US. These are weak economies that are going to get weaker, perhaps dangerously so. Japan's inflation hit 3.8% in November, the highest reading since 1991, with a budget deficit of 7% of GDP, a massive debt-to-GDP ratio of 262%, and interest rates still at zero. Japan looks increasingly like a disaster waiting to happen. Japan's trade surplus in the past has helped mitigate the impact of its fiscal excess. But over the past 17 months, Japan has been running a trade deficit, the longest stretch since 2015. The European Union is not in a better position. With high inflation and a relatively inflexible labor market than other countries, it faces higher stagflation risk. Moreover, unlike Japan that has decided to maintain its stake in the Russian Sakhalin oil and gas project, Europe has decided to cut itself off from Russian energy completely. As a result, the European Union has had to import energy from more expensive sources, and the trade balance of the European Union has swung into a huge deficit that looks like it is here to stay. Any deficit needs foreign financing. This means that the market will make Europe pay a higher price for future economic policy mistakes. In this respect, what happened to Britain under the short-lived Liz Truss government last year should serve as a lesson for policymakers and a roadmap for investors. If Europe and Japan are the big losers, which countries are the winners? ASEAN countries, of course. They're gaining market share in both the US and in China. These countries are poised to continue to reap the benefit of their low labor costs and take advantage of foreign capital outflows from China. These countries have also been careful to not take sides in the US-China rivalry. This has saved them from having to join the expensive global arms race instigated by the Ukraine conflict. Distant water cannot put out a nearby fire. So says a Vietnamese adage. The proximity of China to most of the countries in Southeast Asia means Beijing is better placed than Washington to win over these countries. The fact that the leader of the Vietnamese Communist Party chose to be the first foreign leader to visit Beijing after Xi Jinping won his third term shows that China's aggressive investment in the region is cementing its influence. For China, successful diplomacy in Southeast Asia is to simply prevent the US from turning the countries in the region against her, like the US did to Ukraine against Russia. The Russia-Ukraine conflict is just a dress rehearsal for the multidimensional war between the US and China that will be playing out for many years to come. US and China are the main protagonists, but they each have a supporting cast that may prove to be decisive down the stretch. The US has decided that to win, it needs its allies to fall in with its policies. A good example is the pressure being applied by Washington on Japan and the Netherlands to comply with its new sanctions on the sales of advanced semiconductor manufacturing equipment to China. What is very clear is that Washington has not taken into consideration the impact of its demand on the economic health of her allies. The evidence so far is that although the war has barely begun, Japan and Europe, America's main allies, have already been hugely weakened. China, in turn, is playing the long game. She has not retaliated against the recent US tech sanctions. She's not forcing her allies to choose between China and the US. Meanwhile, China is quietly using her trade policy to reward her allies while weakening America's allies. We are still in the early days in this new Cold War. Given the many advantages enjoyed by the US, the war is still America's to lose. But America cannot win this war on its own, and its actions so far by weakening its allies could backfire in the not too distant future, especially if it decides to go all in over the conflict in Ukraine. If you got something out of this program, I would appreciate if you were to hit like and subscribe to my free YouTube channel. If you want to learn more about my investment strategy, come visit us at davidwunbound.com. Thank you for listening.